amazing real estate agent today that's going to talk about VA. She's a powerful woman, and she's out of the Tampa area. And so I'm going to throw the call over to her, and it's none other than Jamie Garlock, and she's going to talk about VA. And Jamie, before you get started, just kind of tell your background. You know, the unique thing is she has military family as well. So I think that's great when somebody that has that background can teach us about the VA, especially for some of us that don't have that background. So, and again, thank you for all the veterans that are on here for your service as well. But I'll throw the call over to you, Jamie.
Hey, thanks so much, Matt. I appreciate you allowing me to come on. And guys, I'm Jamie Garlock, if you don't know, and I'm a veteran myself. I'm married to a Marine, and I know the stresses of being a military family and having to utilize the VA loan guarantee program. And so that's why this was the topic I chose to talk about, because it's very near and dear to my heart, for not just my own family, but a lot of friends that I've come across being in real estate. As a real estate agent, sometimes we don't really know, like, what do loan programs offer, especially VA. And I've invited a friend of mine to the call, Mark Arrington, he is a lender, but also a veteran. So Mark, I'm going to let you introduce yourself, and then we'll get right into it.
All right, thanks, Jamie. Yeah, I'm a veteran myself. I did 18 years in the Marine Corps. Last 10 was in special operations. And I kind of took the road less traveled by for us operator types, and kind of got into this finance world. And primarily, I do VA loans. If it was up to me, I do 100% VA loans, but obviously sometimes veterans buy second houses and investment properties. So I end up dabbling in pretty much every loan product. The company I work for is Movement Mortgage. Some of y'all may or may not be familiar with it. We did about $19 billion last year. So it's kind of one of those middleweight style of lenders where you still get a little bit of service, but you also get a good rate. So any questions y'all have as far as VA, if I don't know the answer to it, I'm just going to look up the regulation. I'll get back to y'all.
Yeah. Mark, really quick, where are you based out of? Are you in Florida?
I'm in Wilmington, North Carolina.
Okay. Oh, North Carolina. Do you know a guy named Brian Chamberlain?
Doesn't ring a bell.
Okay, he's in Louisiana. He works with Movement Mortgage. Movement Mortgage is a great company. And I've known him for years, but he speaks highly of Movement Mortgage. So guys, definitely hook up with Mark, and Mark can we'll let Mark give him his phone number and things like that at the end here if somebody's watching the replay as well. But I'll throw the call back over to you guys.
Awesome, thank you. So one of the things that I thought was important for us as agents to know is, like, what is the VA loan? Because sometimes if you're in an area such as Tampa, where I live now, I lived in North Carolina where it was predominantly military, but now living in Tampa, it's not. And so sometimes agents in this area really don't know all of the things about VA like they would a regular loan, right? A conventional home loan. So one of the things that I think is important to start with is that all a VA loan is a guarantee to, if like, let's say somebody forecloses on their house, that the VA is going to step in and they're going to take that loan on behalf of the service member. So we have that benefit being military. The other thing that I think is important to understand is, like, who qualifies for that? Because people always think, like, oh, well, it's just active duty military. But in fact, it's active duty military, veterans, also surviving spouses if their spouse was eligible before they unfortunately went on, right? So multiple people are eligible for those types of loans, not just an active duty member. So you're eligible once you've moved on, you become a veteran, or sometimes in cases like surviving spouses, those people are eligible. A couple points that I want to make about VA loans is the fact that with a VA loan, there's no down payment, and there's also no need for PMI, which means your private mortgage insurance. So VA loans don't need that type of insurance like conventional loans may. You can use it multiple times. So that's one misnomer that people don't know, is that you can use a VA loan more than one time at one time. Meaning, for example, I owned a house in North Carolina. I move to Florida. I can buy a house in Florida, even though I still have my VA loan in North Carolina. So I can hold multiple mortgages that are VA, as long as my intent is that it's my primary resident. So Mark, let's dive into that real quick, and just go over like, how does that process work for people that are, like me? I owned a house. I mean, I know how it works, but we're explaining this for people who may not. Yeah, you can have more than one VA loan at one time.
So yeah, it's called bonus entitlement. It's a pretty big misnomer about the VA loan. A lot of people think that you can only have one VA loan at a time, and once you use your VA loan, that's it. And it doesn't quite work like that. The way that it works we call it bonus entitlement, is it goes off of the conforming loan limit. So essentially, depending on where you're at, but in most places in the United States, the conforming loan limit right now is $726,000. So essentially, if you want to use bonus entitlement, that is your limit that you can reach before you have to start putting down payment in order to satisfy the difference in eligibility. So for instance, if you had a house in North Carolina that was $200,000, you could technically then move, as long as your money is moving with you, by means the way that you make your money is moving with you to Florida, then you could be in Florida and get a house that's $526,000 and still not have a down payment. So that's generally how it works. And then the primary residence clause of that is really based off of, you have to occupy it as your primary residence within 60 days. Now, depending on that, there's also, I don't want to call them loopholes, but there's some other ways that we're going about doing it, where the VA actually states, if it is your immediate family that is occupying that as their primary residence, for instance, if you're deployed out of the country, or you already own a house in Texas, for instance. I just did one where a guy owned a house in Texas, and he was using his VA loan to purchase a house for his wife, who was not on the loan, in North Carolina. And we were able to do that because of they were being, primary family, was able to occupy it as their primary residence as well.
Yeah, that's an awesome point. I've personally had to use my VA multiple times at one time. Now, the other thing I find interesting that people don't know is that, let's say your house in North Carolina is $200. We'll stay with that example. And then you buy a house in Florida that's $526. When you sell that home in North Carolina, that entitlement does get returned to you, so that you have that purchasing ability on another property somewhere else if you move it.
Yeah, right. And then the big thing that a lot of people, so the $726,000 has to deal with it if you're using bonus entitlement. But if you're not using bonus entitlement, literally, like, the sky's the limit.
There's no limit.
I've wrote VA loans for $1.5 million houses where you got 100% financing on a $1.5 million house, because your debt to income ratio is able to support that. And the other main thing that the VA loan has going for it is the fact that I can take you up, as long as I have AUS, automatic underwriting system approval, I can take your debt to income ratio as high as I possibly can. It's just going to be dependent on if you run into residual income issues, which obviously, if you're working with a good lender, he's going to check that out before he sends out the pre-qual letter.
Yeah, I love that there's no limits. We actually sold our North Carolina house when we were buying this house in Florida. And so I did worry about that, because I was like, oh my gosh, what if it, this, that, all of the things. But what happened was that house sold and closed. So my home here, we were able to buy almost $800,000 house using our VA entitlement with 0% down. So that was really cool. Now, the other thing I want to point out for people that want to use or help their clients use
I shouldn't
VA,
have told him I missed him.
Hold on, let me mute someone. Josh, can you mute
I was
Jennifer?
being truthful.
All right, so
never be truthful, Jennifer. Never tell me.
I wanted to talk about the funding fee. So, on typical mortgages, there's this astronomical funding fee. Well, with VA loans, there's a couple ways that you can get your VA funding fee to zero. Okay. And one of those ways, and I wrote these down because I didn't want to jack it up. One of the ways is, if you have a service-connected disability, you have a disability rating with the VA, you can get your funding fee waived. Okay. Another way is, let's see. Oh, you can, this is a misnomer. I heard this and I knew it wasn't true because this happened when we came to Florida. If someone is on active duty, they can get their VA funding waived if they have a service-connected disability that they have a rating for. So you could be on active duty, you can have a VA disability rating, not receiving compensation, and still get your VA funding waived. That's the situation we're in, because my husband does have a VA rating, but he's on active duty, and we were able to get our VA funding fee waived. The third way is a surviving spouse. So a surviving spouse, if it was a service-connected death, because they're surviving spouse, right? And they're unmarried. So they have to be unmarried, but they can also get their VA funding fee waived. Again, I wrote down again the active duty with a VA rating. Mark, let's dive into that just a little bit. I know you don't work for the VA, but you've done this a lot. Have you seen any circumstances or instances where, people have gotten their, other than me, gotten their VA funding fee waived, and what's unique about that?
So first of all, I think we just need to talk about what the VA funding fee is and the purpose of it. And the purpose of the VA funding fee is so that they can continue to provide VA loans at no cost to the government, ideally, for those that default. So that's why active duty, for the most part, ends up paying the VA funding fee, which starts off at 2.15%, and then it goes up to like 3% for your second time use. But that actually can be covered by seller concessions as well, which a lot of people don't understand. So the seller concession can actually pay the VA funding fee, but that's the whole purpose of the VA funding fee. So once you become a veteran, that's always what I tell all my Marines and all the guys that are thinking about getting out. Like, even if you have a 0% disability rating, the VA funding fee is waived, because essentially the VA loan is coming from the Veteran Affairs. And a lot of people think that when you're on active duty that you're a veteran, but you're not. You're not a veteran until you actually get off active duty. So that's when you actually are part of the VA. It's just that they give that over to active duty service members, and the way that they're able to do that is through the funding fee. But generally speaking, either you have a 0% or higher disability rating as a veteran. I assume, Jamie, that you or your husband had gotten a disability rating, and actually got back in. So that's why you actually have the disability rating. And then what I do is I pull your certificate of eligibility. Your certificate of eligibility will say that you're exempt from the funding fee, and you don't have to pay the funding fee. The third way is that you actually have a Purple Heart, or an enemy shooting badge, as we like to call it, while you're on active duty. And then that's actually waived as well. And of course, if you're a surviving spouse, the VA funding fee is waived, because it goes off of your husband's or spouse's
eligibility. And that's a good point. Like, I've met a lot of Gold Star families that didn't know that they could use their spouse's letter of eligibility, but the fact is they just need help to go get it. And a good way to go get those letters of eligibility is you can go right to the VA website, or just call your friend Mark and he can pull it for you. Yeah, I appreciate that. So I thought that those were some really important things to go into, because there's always a lot of misnomers about VA loans. What I find here in our area is people don't really know how they work, because it's not a veteran-centric area. We do have MacDill Air Force Base here. However, a majority of the loans that we're seeing aren't military, they're conventional. And so that was one of the reasons why I wanted to teach this class today. I want to open it up for questions before we move on. Does anybody have any questions about the few things that we've mentioned so far?
Yeah, there's one about, does the VA offer a construction loan? So the VA does offer, the VA has a guarantee on construction loans. And
that's actually my next topic was construction. So we can just dive right in and then we'll answer questions, right? It's like, okay, does VA, and I was going to ask you this question, construction loans, new builds, rehabs, and those sort of things. So let's dive into those types of loans using your VA entitlement.
So does the VA allow them, I think, is what that's the better way to kind of look at it, right? So when you're talking about construction loans and all of these, I would say like more niche type loans, it's really going to be based off of the lender's ability or willingness to accept risk. Okay, so a construction loan is an incredibly risky loan, especially right now in our current environment. There are a couple investors, we have two, that are willing to do 100% finance construction loans. But as y'all can probably kind of figure out, cool, you're building this house for 12 months. A lot of things can happen in 12 months. And now you don't have any skin in the game whatsoever. So what happens a lot of times with these construction loans is you have a house that's half built, you know, Marine receives orders to go to Okinawa. He's like, well, cool, I don't want the house anymore. I'll just lose my due diligence or builder deposit or whatever. So they're very risky loans. And with that being, they obviously have a higher closing cost and a higher interest rate that's associated to them. But does the VA approve those? Yes, they do. Do they approve Reno loans? I've not heard of a VA Reno loan. I've not done one. I would just have to research it, because to me, when you buy a house, it has to be turnkey. So the fact that you would do a VA Reno loan doesn't really make sense to me, but maybe they do. I would just have to look it up. We don't do Reno loans. They're a nightmare. They're just an absolute nightmare.
Yeah. I think so. The VA does do them. I actually did one in North Carolina. You know, the renovation process, it is very difficult to navigate that loan. And a lot of companies just don't like to do them. You could do them for the VA if, again, your intent is to use it as your primary residence. A lot of people want to just get into these fix and flips and use a VA loan, and that's not what it's intended for. It's intended for people that are veterans or active duty, you know, to be able to purchase a home that may need some renovations, not for flippers.
Yes. Yeah. I mean, there's definitely house hacks, right? So if y'all have your guys and you're looking at, you know, this is their first time buying a house or something else like that, or it's like a single active duty person or something, then you kind of discuss like kind of how to house hack this thing. And essentially how you house hack it is you go buy a house, you stay in it for a year, and then after a year, you pretty much have met the primary residence clause of that VA loan, and then you can go and buy another one. Ideally though, they want you to kind of purchase those like far away from each other. Usually 45 miles is like kind of the going thing. Or me being a smart loan officer needs to explain to the underwriter how this is going to benefit the veteran's overall financial standing. Therefore, like, hey, like his family grew, so he needed a bigger house, or the house that he is purchasing is A, bigger, and B, closer to his work. So then it's actually providing some sort of a financial benefit for the veteran to do that, because ultimately the VA's main goal is to obviously be able to provide this benefit to the veteran, but also not put the veteran in a financial, constraint.
Right. I did have a client one time that exactly what you said. You know, they bought a 2-2, you know, a few years later, they had 2 kids. And they needed a bigger house. They wanted to upgrade. It was in the same town, but the lender, smart like Mark, went ahead and just wrote a letter of explanation stating why they needed a bigger house. And they were able to use their VA loan again in the same town, not too far apart. And so, yeah, different scenarios, situations, sometimes those can happen. You just have to reach out to your favorite VA mortgage lender like Mark and ask the questions, because sometimes there's situations that we don't think is going to work as the agent, but maybe the lender has some creative ideas, or vice versa. That's why it's good to have a really good partner. If you're a real estate agent, you need a good lender partner that really knows the type of loans that you're trying to help your client with. And in this case, it's VA.
100%.
Yeah. Awesome. Does anybody have any questions about that? Yeah, that's the idea, right?
Benefit.
Yeah.
So it's just a different, underwriters and lenders have to look at a VA loan as a benefit, not as a risk, right? So, and I mean, that gets into recruiting, and I can just go on a diatribe if you want me to, or rather not. But yeah, ultimately it's a benefit. It's a benefit that service member has earned. So therefore the VA is a lot more proposed in order to let the veteran use his benefit. Because if you can't use a benefit, it's not really a benefit anymore. So that's kind of just a different mindset that they have.
So on the construction loan side of things, is it better to find the builder and have the builder purchase the property and do it that way versus?
It's easier, and yeah, for sure. If you can have the builder, then you're just talking about a new construction, and that is just the exact same. It's the same as anything else. But if you want, hey, a custom house, the builder wants to receive draws, then that's when things get a little bit complicated, because usually how construction loans work is the builder receives 4 draws over the thing, and then the borrower is paying interest just on those draws. But for a VA loan, the borrower cannot just pay interest on those draws. So the borrower essentially can't pay anything up until the house is complete, turned and ready. That's when the mortgage actually starts for him. He can pay the funding fee. He can pay things up front as far as, if there's a requirement.
Upgrades.
Yeah, upgrades or whatever else. But as far as paying interest, he can't pay it. So a lot of builders don't even really want to do it because now they're like, cool, I don't want to do this. So if the builder has the capital to actually fund the project and then just sells it to that veteran, then that's usually the best course of action.
Yeah. Yeah, it's pretty easy. If you're in a area with like Jacksonville, North Carolina, and you know a builder that's already building houses in a community, it's easier to get that done than saying, hey, Mr. Builder that I don't know, can you buy this land and package it together? Sometimes that gets a little more difficult. But the last thing I want to talk about is seller concessions. This is a big thing because, we saw it several years ago where there were a lot of seller concessions, then we saw zero. So I wanted to deep dive into seller concessions and what that looks like for a veteran on a home loan, how much they can receive. And then at the end of that, we'll talk about some creative ways that we've seen veterans get the most money in their closing. So Mark, let's dive into concessions. How much can we get as a veteran or for our clients and seller money?
So I think it's pretty sure it's 4%. I always have to look it up because FHA convention, I'm pretty sure it's 4%. I always look it up no matter what. You ask me a question about that, I just like make sure that's right? But it's 4%, right? So it's 4% of the overall loan amount that they can pay towards seller concessions. And they can pay the funding fee with that as long as the overall seller concessions doesn't exceed 4%. There are ways that we used to kind of get around some stuff where they were able to kind of do invoices and everything else, but they really tightened down on that. So if you want to do it via invoice or something like that, we have to ensure that it actually gets done now before closing. Whereas in the past, we would just be able to have those invoices on the CD and then we could do it kind of on the back end. Also, some of the other things as far as seller concessions and everything else goes, you have to make them very, very vanilla when you're writing up your addendums and your offer to purchase, right? The simplest way to make it written out is buyer agrees to pay 4% towards or seller agrees to pay 4%. Seller agrees to pay 4% towards borrower's closing costs, period. That is it. That's all that me as a lender ever want to see. I don't want to have a mention of repairs in there. I don't want a long list of anything. I don't need that because the second you mention the word repair, now we start getting into contractor letters. We start getting into invoices. We start getting into final inspections and so on and so forth. So it starts like this big, snowball
effect. It's a diatribe of let's get receipts together.
Yep. And then
however, I have seen, and I have one closing right now on the 21st. It's VA. It's one of my Jacksonville couples. It was just kind of crazy because they're buying here now, but they have the 4% up front from the seller, but after we received the home inspection, there were some pretty hefty repairs that didn't need to be done, but the buyer was adamant about having them done. So we did do a $5,000 concession on top of the 4%, but as you said, it went directly to the vendor for the replacement of, towards this HVAC. So that's one thing that I tell people when they're like, oh, it's 4%, that's it. I'm like, well, it's a little bit of a gray area because yes, it's 4% on closing costs and, title fees and things like that. But if you have an invoiceable item such as an HVAC that is going to be replaced, that the seller can pay additional towards that.
It's going on the seller side. Yeah, it's going on the seller side of the CD.
It'll be, yes, exactly. It goes on the seller side of the CD. So it's a seller invoice, not a buyer invoice.
Yeah, it's not.
That's a way to, enable your buyer to get additional funds if it's on that seller side of the CD and it's for something. So that was one of the things that I thought was important because, you just think, oh, it's 4%. Well, typically.
Yeah. And this is the main thing when it comes to concessions, right? Is it has to be understood that they can't go towards down payment in any loan type whatsoever. And that the borrower cannot make money on the transaction. So you have to either use those to like buy points, for instance, because there's a lot of times where I've gotten so much concessions that I can't even use it all, especially when it comes to a VA loan, because there's no down payment requirement. So I have to then be like, okay, cool. Well, we're going to buy the interest rate down or do a 2-1 buy down or a one-time buy down or something else like that. But a big misnomer is although they can't make money on the transaction, but for instance, if they put $5,000 worth of due diligence down and we can verify that $5,000 worth of due diligence, they can get cut a check at closing for $5,000, right? So they just can't put down $5,000 worth of due diligence and they get $6,000 back, because then they've technically made money off the transaction.
Right. That's always interesting for me, because, you know, depending on the state that you agents are in, that matters too. So like in North Carolina, you know, we have that due diligence fee. In Florida, we do not have a due diligence fee, but we have an inspection period. It's all earnest money. So yeah, just make sure to check your state's rules. And by the way, if any of you are in Florida and North Carolina, like me and Stephanie here on the call, Mark does service both areas. So we're gonna, I know we're wrapping up our time, but I want to open it up to any questions that anybody has. Alan, I know that you had posted a question there. You want to unmute and ask away?
I understood something like that if you have a concession like that, there's only a maximum you can go, like up to 6,000. Is that correct?
4% of the loan amount.
So your regular.
So it's all based off the loan amount.
Yeah.
Okay.
Remember, Alan, if it's on the seller side of the CD, which an HVAC repair in the transaction I'm doing is on the seller side of a CD, so there is no limit. Now, it would probably be questionable if you had, you know, $50,000 on there, but there's not really a limit if it's on the seller side, because they determine where their funds go.
Yeah, I always say it has to pass a sniff test, right? If it doesn't smell right, then it's probably not going to work.
Yeah, exactly.
I was having a brain fart. I was thinking on the buyer side, if they wanted to do a concession towards something for a repair, they could ask for the repair to be waived.
Yes. Yeah, just make sure. I mean, obviously, the contracts that we as the lender see, like that's once something's unseen, it can't be unseen. Is what I always kind of tell people. So,
are you guys seeing a lot of those? I hate those Tidewater things, man.
Yeah, you want me to get into that? What that is?
Yeah, I'd love for you to.
Yeah, let's do it.
The
Named after my area.
The problem I have with the Tidewaters is so I had this appraiser one time on the Tidewater, and he was like, literally, he goes, "I'm protecting my veteran," and I'm like, "Listen, you're supposed to do an appraisal and actually look at the comps." You know, sometimes I feel like I don't know, maybe this is not true, but are the appraisers for VAs, are they all veterans, or no? It has nothing to do with that, right?
They're hired. Okay. They're hired
right.
appraisers that are just VA certified.
Maybe this guy was just had a heart, for protecting the veteran, which I have no problem protecting veterans, but I felt like he was being unfair, even the buyer's agent and the seller's agent. But it was just one bad experience, right? But I'd love for you to tell what the Tidewater and why they do that, because that's really the only unique, I think, type of appraisal that happens in real estate.
Yeah, so I would just call Tidewater a mechanism, right? So it's not necessarily a different appraisal or anything else. So it's just a mechanism. So essentially what happens is up into the due date, which is 10 business days after you order the appraisal, it's accepted by the VA, it's due 10 days later. A lot of times the VA appraisers will be like, okay, cool. I don't think this thing's going to comp out. I don't think we're going to be able to support the purchase price. So they initiate this mechanism, and the mechanism is called Tidewater. So essentially, once they initiate that mechanism, you have 72 hours in order to send in a matrix. So usually it's from the listing agent, and he sends in comparables that support the purchase price. And a lot of times the VA appraisers already took those comparables into consideration. Sometimes maybe not, or maybe they were like, cool, this really isn't a comparable. You're just hoping and wishing here. But essentially you have a rebuttal period where you can be like, cool, this supports the purchase price. Here are the comparables that we used when we came up with the purchase price. And we want you to consider these comparables in your schema when it comes to actually getting the value for the appraisal. The main thing that I see a lot of agents mess up with this is it had to have been a comparable at the time of the inspection, right? So if a house sells 2 days, after the inspection for 50 grand above asking price, it doesn't help you out, because at the time of the inspection, at that snapshot in time, it did not happen. So, and
that's a good point to bring up.
Yep. Yep. So I see it all the time. People are like, oh man, this one's selling tomorrow. Just hold off for a day. And I'm like, well, we should have just held off ordering the appraisal for a day then. And by all means, if y'all know some stuff like that's going to go, that's a conversation you need to have with your lender. Because my idea of an appraisal is I order that thing as soon as I possibly can, because the one thing that y'all always want is the appraised value as soon as you can possibly get it. So I always order it right away. So if it's something like, hey, like I have questions about this, let's wait 2 days because this other house is about to sell, then that's just a conversation you need to have. But so once the appraiser comes back, right, Tidewater is issued, we still don't make value. I had one that was under 25K below value, right? Then we can do something called a reconsideration of value, where we actually contact the VA. We get a letter from the veteran themselves. It has to be from the veteran, signing it, explaining their situation. Obviously, if you're dealing with a smart lender, he's going to explain that situation well. And then the VA then is able to look at those comparables that the appraiser either did or did not look at. And the VA can actually raise that appraised value up into the purchase price if it makes sense to do it. I've won some, I've lost some. Obviously, the VA is just not going to do something just to do it. But for the most part, like we talked about, the VA wants the veteran to get into the home. So if there's a way to make it happen, the VA is going to do it. One consideration with that is I have a good relationship with the VA. Our underwriters do, so we're pretty fast. Like we can get that reconsideration of value done in like 72 hours. But per the VA, it's like a 2-week process. So that's something you'll need to kind of factor in when it comes to, you know, closing dates and everything else, and see if the listing agent's going to be acceptable with that.
Awesome. That was great information, because, you know, we don't always know behind the scenes how that works, right? As agents or as veterans ourselves. So it's good to kind of know, like, that timeline. Yeah, they have 10 days to return an appraisal. However,
business days,
X, Y, and Z, business days, or if X, Y, Z happens, you need to be able to have that flexibility to extend. Now in North Carolina, there's that 14-day grace period in the contract that is not in Florida's contract. So it's interesting to see that, or okay. 7. It's okay. I know that there was a lot of changes July 1st.
Yeah.
July 1st. I know. I need to get read up, but you know, there's that period where you need to know, hey, if this happens, you know, what is my options, you know, to help my client best. Awesome. Well, Mark, we really, really appreciate your expertise here today. Like, I always come to you with all of my crazy questions and ideas to help veterans buy homes. And I appreciate you so much for being here.
Absolutely. I just put my number in the chat. If, you know, even if I'm not licensed in the state that you're in, if y'all got questions or whatever else, like I look at the lender's role as y'all are actually my customers. Obviously a borrower is my customer too, but at the end of the day, like I'm here to kind of serve you. And if I'm not doing my job, y'all can't do yours and feed your families. So anything I can do to support y'all on your mission, I'm happy to do so. So just please let me know.
Thanks so much, Mark. And people that are watching this video as well, you can reach Mark at 901-219-7911. That's 901-219-7911. He's 18 years, served our country. Give him a shot in real estate. And I'm sure you don't just do, I mean, in mortgages, I'm sure you just don't do VA loans, right? I'm sure you do.
No, pretty much do anything other than stated income, and I don't like adjustable rate mortgages. So anything other than those two things, call me.
Awesome. All right, guys, we appreciate it. It was great. Thank you, Jamie, for all the value you brought today. And we'll see you guys next week on the No Agent Left Behind Mastermind. Thanks so much and have a great day.